You are standing in a small coffee shop on a Tuesday morning. You are 22 years old. Your entire global cash reserve, measured down to the exact penny, is $12. You order a $4 coffee. You tap your debit card against the payment terminal. A sharp beep echoes. The transaction is approved. But what you do not know is that 15 minutes earlier, an automated $10 payment for a software subscription was deducted from your account. Your true balance was actually just $2. That $4 coffee just pushed your balance into the negative. Negative $2. And instantly the cold algorithmic system of the bank is triggered. It does not send you a warning text. It does not give you a grace period to transfer funds. It slams a $35 overdraft fee directly into your account. Your morning coffee has just cost you $39. You discover this during your lunch break. Your heart skips a beat. You frantically call the customer service number printed on the back of your plastic card. You listen to hold music for 45 minutes, looping a pre-recorded message telling you that your call is very important to them. Finally, a representative answers with a flat, monotonous voice, professionally trained to show absolutely zero empathy. You explain that you are only short $2. You tell them that you desperately need that $35 to buy groceries for dinner, that your paycheck does not clear until tomorrow. The answer you receive is a brick wall. It is bank policy. The system has already processed it. We cannot manually override the algorithm. Thank you for banking with us. That is your first naked financial lesson. At the very bottom of the wealth pyramid, a bank is not a place that protects your money. It is a machine designed to tax your poverty. You realize a cruel paradox. When you desperately need money the most, the bank slams every door shut. At a net worth of zero, you are not a client. You are a product. You are a low-risk, high-margin revenue stream generated through micro-penalties, minimum balance fees, overdraft fees, out-of-network ATM fees, credit card interest rates soaring to 25%. The less money you have, the more you have to pay just for the privilege of holding it. The retail banking algorithm judges your entire human worth by a 3-digit credit score. It does not care who you are. The moment you hang up the phone, you make a promise to yourself. You will never let an automated machine humiliate you like that again. You declare war on your own financial state. You optimize your savings rate. You work overtime. You relentlessly cut out every non-essential expense. You learn how to invest your first few fragile dollars into the market. 6 years pass. You are now 28 years old. Your checking account no longer sees negative numbers. You have worked tirelessly and finally accumulated your first $100,000. And suddenly, the attitude of the machine begins to shift. The bank sends you an email with a formal, elegant subject line. They no longer refer to you as a standard customer. They call you a premium client. They invite you to a local branch. This time, you do not have to stand in the long line at the general teller window. You are ushered into a glass-walled office with air conditioning, offered an espresso from a high-end machine, and asked to sit in a leather chair. A representative in a tailored suit smiles and hands you a sleek black box. Inside is a brand new credit card. It is not made of cheap plastic. It is made of heavy, solid metal. They talk to you about exclusive perks, business class airport lounges, global concierge services, higher credit limits, a bonus 0.2% on your savings yield. When you hold that metal card in your hand, its cold, heavy weight provides an intense illusion of success. Every time you pull it out to pay for a dinner with friends, the sharp clack it makes against the wooden table feels like a statement of arrival. You think you have won. You think you have finally stepped into the world of the wealthy. But it is just an elaborate mirage. A few months later, a brilliant investment opportunity appears. A piece of commercial real estate is being sold at a steep discount, or a trusted partner wants you to buy into an expanding business. You need financial leverage. You need to borrow $300,000. You walk into the branch with the quiet confidence of a premium client. You sit in that familiar leather chair and make your request. The smile of the representative remains, but the procedure does not. Suddenly, your heavy metal card loses all its magic. They ask you to fill out a massive stack of paperwork. They demand 3 years of tax returns, pay stubs, and detailed proof of the origin of your cash flow. Your application is thrown right back into the exact same algorithmic machine that punished you for $35 6 years ago. A week later, you receive an automated email. The system has denied your loan. The reason provided is that your debt-to-income ratio does not match the safety parameters of the algorithm, despite the fact that you have $100,000 in cash sitting inside their very own vault. You sit in your car staring at the rejection text on your phone screen. The metal card in your wallet suddenly feels utterly useless. You realize the bitter truth of the mass affluent class. The banking system created the premium client trap to pacify high-income earners. They give you superficial perks, shiny cards, and priority boarding to secure your deposits. But at your core, they still treat you like a number. You are still judged by a computer program. You still have to beg a machine for access to capital. You have a black card, but you have zero actual power. The real game is not played in airport lounges or advertised on billboards. True financial power operates behind invisible doors that, at this level of wealth, you cannot even see the handles to. To neutralize the algorithm, you realize you cannot just be a high-income employee with good savings. You have to completely restructure the architecture of your wealth. 7 years later, you are 35. The relentless grind of optimizing your income has compounded. Your business has scaled, or your long-term investment portfolio has quietly crossed the $2 million mark. The fundamental nature of your wealth has shifted from cash in a checking account to equity and assets. And because of this, you no longer walk into a bank branch. The bank comes to you. A man in a subtle, flawlessly tailored suit arrives directly at your office. This is your first true private banker. The language in the room completely changes. They do not talk about withdrawal fees, credit card points, or priority boarding anymore. They speak in hushed tones about tax-efficient wealth structuring, asset protection, and capital preservation. For the first time, you are treated as a partner, not a metric. However, at this $2 million mark, you must remain vigilant. You realize that you are no longer penalized for being poor, but you are now a highly lucrative target for premium financial products. The bank is still trying to extract value from you, just with a friendlier face. They subtly push their in-house mutual funds with hidden management fees. They pitch complex life insurance policies. To truly own this machine, you cannot stop here. You have to push further. You have to reach a level where the physical laws of money begin to completely invert. You turn 42. Your net worth crosses $10 million. You decide you want to buy a $2 million vacation home by the coast. A normal person, even a wealthy one, might sell $2 million worth of stock to fund the purchase. But doing so would trigger a massive capital gains tax event, instantly losing hundreds of thousands of dollars to the government. You do not do that. Your banker proposes a Securities-Backed Line of Credit, an SBLOC. You borrow the $2 million against your own stock portfolio at an interest rate of just over 1.5%. You buy the house in cash. You do not sell a single share. You pay $0 in taxes. As you sign the closing documents, you battle the old psychological programming your parents taught you. You were raised to believe that all debt is a suffocating trap. But the cold, hard math sitting on the desk in front of you proves otherwise. Using the bank's money is vastly cheaper than using your own. The bank is now practically giving you free money, just to keep your assets safely locked in their vault as collateral. You have mastered the mechanics of debt. You have turned the exact same tool that crushes the middle class into a shield that protects your empire from taxation. But the absolute peak of financial power is not low interest rates. It is the ability to manipulate time. You are 45. Your net worth sits firmly at $25 million. You have entered the realm of the family office. It is 4:30 p.m. on a Friday before a long holiday weekend. A distressed sale business acquisition drops onto your desk. It is a once-in-a-lifetime opportunity to buy out a competitor, but the seller needs $5 million in cash wired immediately to close the deal before the weekend. You log into your secure portal and initiate the transfer. Instantly, a red banner flashes across your screen. The familiar retail algorithm has flagged the transaction. For security and compliance reasons, the automated system freezes the wire. It states that the funds cannot be released until the next business day, which is Tuesday. For a split second, the memory of that $35 overdraft fee from when you were 22 flashes back into your mind. That familiar, sinking feeling of helplessness threatens to return. The machine has said no. The algorithm has blocked your path. But this time, you do not call a customer service number. You do not wait on hold for 45 minutes. You pick up your phone and dial a direct unlisted number to your senior private banker. It rings exactly once. You calmly explain the situation. The banker does not quote bank policy to you. They do not tell you to wait until Tuesday. While you are still on the line, that banker uses another phone to call the bank's chief risk officer directly on their personal cell phone. A human being looks at your total asset profile and manually overrides the security algorithm. 20 minutes later, your phone vibrates with the confirmation. The $5 million has cleared. It is 4:50 p.m. The deal is secured. The transaction is done. But as you sit alone in the silence of your office, listening to the hum of the city below, you realize the true meaning of $25 million. The next morning, you walk into a small coffee shop. You order a $4 coffee. You could buy the entire franchise if you wanted to, but you do not. Your lifestyle remains perfectly quiet. As you tap your card and hear the beep, you understand that the financial system itself has not changed. It is exactly as ruthless, cold, and calculating as it was when you were 22. The only thing that has changed is your position within it. Money at this level does not buy luxury cars or designer clothes. It buys the power to deactivate the rules that govern everyone else. It buys the absolute silence of administrative friction. It buys immunity from the algorithm. You have completed the journey. You have transformed from the product of the banking machine into its undisputed master.